Welcome to Trading Lounge and the US indices for Monday the 4th of April. So with the SP 500 here, in the short term, this is what we're looking at here. We're looking at a wave 3 with an A and a B and a C for wave 4 and then up for wave 5. So then we need to talk about the bigger picture, about the bearish and the bullish picture. But just before I do that, just this wave 3 here, this move down through here, I've got it as an A and a B and a C to this point here, but it can also play out a little bit differently with a wave 4 here coming back to this wave 4 of 1 lesser degree and then coming down and then moving up. So I don't think that we should be interested in trading it on the Monday. We can either just continue to push up here for the B wave up to this into this space, or we can have a little ABC back to this little area in here, or anywhere in this space, anywhere in this box really, for wave 4 and then down for wave 5 here. Then a 3-wave move here for this. Let's just assume that the market does come down here. Then we can look for an ABC pattern here. So not really interested in that. This particular move down through here as wave C, trading the third wave down here, so there'll be 1 and 2 and 3 and 4 and 5 here. Capturing the third wave for day traders would be fine. Otherwise, we need to look for this move up through here in 5 waves at that point, so we can look at that at the low here. So wave 4s get a little bit messy, and I'm just outlining it as a simple ABC pattern at this point. This could be counted differently down here as well. We'll just wait till see if we do push up from this point for wave B, or we come down here and we do this. So we'll just work through this on the the Monday, Tuesday, and we'll see where we get with that. But my video today is really about the bigger picture. Okay, so I want to have a look at the bearish picture and the bullish picture, and I understand that some folks think the market's bullish and some think that it's bearish and so on, but for me, I need to find the balance on both of them. I need to understand both sides of the market and the wave counts for both sides of the market, and then basically drill down within those, and eliminate them as we go. So that's what we need to do at the moment. So we're just going to go here and have a look at let's have a look at the bullish count first, which I think is on the daily chart. So the bullish count will look like this, with well, it can be a WXY, but I've always had this here as the A, the B and the C wave here, so I'll leave it as that for the time being. I do have it as a WXY, but it doesn't matter. It still leaves wave 4 here in that case, and then wave 1 and 2 here and 3, and we're just talking about that ABC for wave 4 at the moment, and then up for wave 5. So we could trade wave 5 up, as I mentioned. We could look to short some of this here perhaps for wave 2, but this is the reason we would look to shorter here for 2, is because this is also where it gets bearish at this point. So I want to have a look at the bearish pattern. So I want us to be on the same page as we get to this top here, so we fully understand where we are and how we're going to approach it, and the two patterns that we're tracking. So on the 2-day chart, nothing special about a 2-day chart, this is how it would play out here with this as an A wave here, then an A and a B, and 1, 2, 3, 4, 5 for the C wave, for the B wave, and then down at this point. Now yeah, my reasoning behind this particular move, and this would probably have to be upgraded to, I'd say, to not primary wave 2 but cycle wave 2 at minimum, I guess, because but anyway, I'll go into that later. That's not here nor there at the moment for that. But the reason that I've got this count for is mainly because of the banks. So when I bring across the banks here, Yeah, so with the banks here, we can count it up as 1, 2, 3, 4 here, 1, 2, 3, 4, 5 for 1 and 2, and then 1 ABC for 2 here, and then 1 and 2 and 3 and 4, 5, and so on to move up here, leaving us with this high up here. This could also be lifted up to cycle degree as well at minimum, so maybe even super cycle. I'll need to double check that. But that's, as I mentioned, that's not here nor there at the moment. So this is the top here in this instance here. This is 50.11 and this is 50.08 at this point. So we do have a very clear 5-wave structure to the downside here. Now this market has pulled back into where it's supposed to have pulled back for a corrective move, and we can label that an A wave, a B wave and a C wave, and we can look at that in a moment. So this at the moment would be, I mean, obviously there's going to be support at 40 here, and where this, you know, when we're talking about this support at 40 here, then this is where we're going to see the S&P do its sort of thing. So we'll have a look at we'll go into the look at this in a smaller degree here. Let me just get a little bit more data in here as well for this. 20 enough. Yeah, that takes us to the previous low over here in that instance. So, you know, this move down in the banks here, you know, that kind of equals up really with, you know, the S&P 500 here moving down in this area here, and we're looking for a rally here and then down for wave 4 and then up for wave 5 here for that. So the banks have really got to play out in the same sort of pattern as this, you know. So that means that this little B wave here and this move down here will be this wave 4 here, if we look at this as wave 1 here and 2 here, and then all the way down for wave 3 in here. So wave 4 and 5 here will give us that wave 1 there at that point. So that will be wave 4 and wave 1 for the banks at that point. So this move up here for wave 2, it will give us a new high on the S&P and some other and stocks within that, you know, some of the tech stocks. But then when it reaches this, we're looking for it to come down at that point. Now, in this instance, we'd be looking for it to come down in a third wave at this point. So we'll be looking down probably anywhere from 30 to 33 here for this move to the downside here for this. So already the banks have, with this move down here, I suppose we could force it and look at it as wave 1 here and coming back for wave 2 as an ABC pattern, but it's possible. But I think that would be stretching it a bit. I can also see that even though it's stretched here and pulled down to this large number, it will consolidate around here for a while and won't move as much. So the big move that it had here, you know, is not showing up on the S&P. It's just gone to here. So the S&P will just naturally do its thing here, but this will tighten up in this area here. But when this is going up to wave 5 here, we'll be looking at this as a 3-wave move up here, and then we need to look down at that point. So the bottom line here is that if we get 1, 2, 3, 4 and 5 here, if we get 5 waves here, then we're going to get another 5 over here, which is going to take that low out here and put us in a bear market. So that's my concern with the S&P in that space, you know. So yeah, coming back to the banks, that would give us 1, 2, 3, 4, 5 down here. So with the bearish counts on here, we would have in this area through here, then we would have this move down through here, probably a bit quicker than that, but yeah, having another move down into, you know, into the 4,000 area or probably below that, depending on what speed the market's got at that point. So this may or may not happen, but when I look at the banks, that's what I see that can happen or could happen. So that means that I need to be very careful about how we approach this top here, you know, how it plays out. I mean, also too, for the Nasdaq, it also looks like the Nasdaq is already, you know, as the Nasdaq had, this is the low here, not this one here. So the Nasdaq is already got 5 waves up here. So the Nasdaq could already have a top in play in this market. So because with the Nasdaq, this is a triple Q here, and I'm using this because we started to count up here with 1, 2, 3, 4, 5 for 1 and 2 here, 1, 2, 3, 4, 5 here. Maybe I could stretch that out. No, that all sort of fits in there quite nicely. 3, 4, 5. So basically, we can get 5 waves in this leg here for the triple Q because I've just been counting it like that. So it'll be interesting to see how this plays out. So, you know, we may already have a top in this space for this market. So with the Nasdaq here, I could look at it as an A wave, a B wave, and a C wave to this point here, or it will follow the S&P and have another little move here. But the good thing about this market is that we'll be working with the 15,000, so it's going to show up you know what's going to occur in this space here. I mean, as a classic trading levels pattern. So we can look to go long over here for that. If we're looking at this whole move up here as well as wave 1 here, then we can look at the next 5 waves move up. So it could be bullish, but I just need to get very clear about it across this level. So we'll have time here because, you know, it does spend time here when it first arrives here. So it will do the same thing here again. So if we get this pattern here, let's just say we've got to the 15,000 at the moment. It was a bit higher, but we'll call this the arrival and the reaction and then the first high above the level. So this one here we can go long on, and then this one, and we can bring it down to this one. And if I get some more information about something, then we could also go long from here. But we'll also be looking to short the market once we get that top in here as well. But we need to be clear on that. So we need the reverse pattern of that when we go to look to short the market at that point. So we'll be looking at it that low, coming up from that low to that low and looking to short it. But at the same time, we'll be also looking to go long on these tops coming down through this side as well. So the 15,000 will be a line in the sand that we'll be able to use within this space. So I'll leave it at that, but I just, you know, we'll continue to work through these particular patterns. This is the Russell here. We've got as a bullish pattern as wave 4, and that's fine as 1 and 2 here, and then up for 1 here, and then looking for an A and a B and a C for wave 2. So I won't make a call within this just here. I'll just expect it to follow the rest of the markets for the time being, and yeah, like I said, we'll just watch the S&P 500. That was another point too, which I just wanted to bring up. This is the S&P 400 here, just to give you another sort of something to think about, is that it's a daily chart. It's the S&P 400, so the mid caps. So we could look at this here in a couple. Obviously, we can see that we've got 5 waves here for this. Okay, it's not the low, this is the low, but this move down through here has really given us 3 waves down here as an A and a B and a C wave here, and it's also given us 3 waves to the upside here as well. So we could look at the S&P 400 as an A and a B and a C wave down to this point, and then we could also look at it here as an A wave here, a B wave here, and then a C wave up here with 1 and 2 and 1, 2, 3, 4, 5 here with the top in it. It looks like we've got an impulse wave coming in here as well. The main point here, the takeaway here, whichever way you look at that, this low here has got 3 waves down in it. So that what that does in one way or another, I've just counted it very simply so you can kind of understand it without going into double and triple zigzags, is that this is the low and we've got 3 waves down to that point. So that means that, well, this has all got to be corrective in some way or another, you know. So it's always a bit tricky, I have to say. When you see the market moving up here, you get the FOMO and you want to think that the market's going to be continue going bullish, you know, and continuing going up. And I would like that too. But when I'm seeing stuff like, when I'm seeing the banks fall out of bed and I'm seeing patterns like this, then I have to question, you know, the bullish count for the markets. And that's what I'm doing. And I'm just trying to figure out what the bearish count is and what the bullish count is for all of these markets. So we won't be making any calls on the Russell or the Dow Jones or the Triple Q or the Nasdaq until we've got things in place a little bit. We can trade the we can trade certain things, and as I mentioned here with the S&P here, we could trade the third wave in here, and we can trade this part up here once we've got confirmation on things. But once we get past this point here, then it gets a little bit tricky at that point too. So and I'm working the same pattern with the stock market as well, with the US stocks, because obviously it's going to partly come from there as well. So I'll leave it at that, but just because it's Monday, I just wanted to give us some food for thought in terms of thinking that this market is, you know, it has moved up strong. You know, will it continue to move up strong? I don't know. We need to get past certain points within the market, and there's a good case for the bearish side of the market. So I think we need to be at a point where we take both sides with equality and then work the wave counts in this side over here, work them, because there will come a point in here where we'll know that we need to be bearish or we need to be bullish over this side. So in between all of that, we can, you know, do a few trades and shoot the breeze and, you know, have a bit of fun, whatever. But there'll come a point over here that it will be decided for us that we need to, what side we need to be on at that point. And if it is this side here, then we'll be looking for 5 waves down in this move here. So a move back below the below these lows here anyway. So from the 4,000 a bit lower in that space. Alrighty, that's all I really wanted to say today, is just look at the intraday pattern and just spend a bit of time on the bigger pattern and sort of justify why I'm looking at it like that. Okay, cheers.